All right. So today we want to look at three simple hacks to overcome market manipulations. So I'm going to dive right in. I won't waste time. I don't want to waste any of your time. In the next 20 minutes or 30, we should be done. So I will be very, very fast. If you have any questions, so just write them down. If you have questions, write them down. At the end of my presentation, I'm going to share, I'm going to answer all your questions. I'm going to answer all your questions. Who is seeing four trend lines? Yeah, and then, okay, this is what you are seeing, and you are seeing four trend lines. All right, that is not what I said you should spot for me. So let's begin first. What is market manipulation? So according to Investopedia, market manipulation refers to artificially inflecting or deflecting the price of a security, or otherwise influencing the behavior of the market for personal gains. So that is the definition, like dictionary meaning of manipulation. But very soon, in the next few minutes, we are going to see how this manipulation happens on the chart. So in the next, let's say, 4 slides, I'm going to show you some live examples on the chart. So it's easier to manipulate the share price of smaller companies and penny stocks because the analysts and other market other traders do not watch them closely as medium and large cap firms. So that is why I always advise that you should trade popular currencies, not exotic pairs. The exotic pairs are easily manipulated, like let's say USD ZAR, USD Turkish lira, or even pound Turkish lira, or even a USD Nigerian dollar. Some brokers call it Nigerian dollar instead of a naira. So these are easily manipulated. So then who manipulates these markets? That is the next question. Who do you think manipulates the market? It's the big players in the market. I call them the whales and the sharks. The central banks actually do more of the currency manipulation because they control the interest rates. The brokers are the ones fighting with retail traders because they actually know the number of trades that the number of positions that are running on a particular broker, so they tend to trade against you. But the hedge funds, when they are doing manipulations, they're actually benefiting from taking advantage from their clients. Like for example, they have a client that wants to come in with a huge volume. They actually take advantage of this during the currency fix to uh, manipulate and also get small profits from there. Why do they manipulate the market? So the big players, the whales and the shark, they are smart. They don't just do things just for fun. They always want to make money. So the end goal why they manipulate the market is to make profit. Okay, so as we are moving on, we are going to see how the manipulation happens and how they also make their profits. So just know that the big players, the whales and the sharks, they manipulate the market just to make profits. They are also in this game to make profits. So any opportunity they have to make to make profits, they take it very, very, very fast. All right. So the next question I want us to consider is who is really affected when the market is manipulated. Now the market manipulation really hurts the day traders and other short-term traders like the scalpers. Uh, they easily stop out traders working on lower time frames because movement which is seems to be very big on to a day trader to get them either enter or exit a market is actually a tiny move in the higher time frame. So the smart money traders, which are the swing traders or the position traders, guys trading on the higher time frame, are not really affected by the market manipulation. So I have some examples here which I'm going to show you how this manipulation happens and how it really affects those traders on the lower time frame. So this is how the manipulation really works. So the big players put huge orders into the market and influence price to go to certain levels so they can buy low. You know, big players they want to buy low. and why, and they also sell high, so they make consistent profit. So if a price of, let's say, euro USD is already on a high, all-time high, they most times they won't like to sell at that resistance, because so many retail traders have seen there is a resistance, and they'll start selling. So they'll keep pushing price higher before the sell, just because they want to sell at way higher prices. In forex, if you need to if you want to buy, someone has to be there to sell. So if there's no one to sell to, your buy orders is worthless. So we always have buyers and sellers in the market battling, but whichever way the volume goes to, that is the set of traders that will take control of the market at a particular time. So they actually use the news to their advantage. They use the mainstream media to actually do this manipulation also. So when there is an high impact news, they use that opportunity to drive price to their target zones. And retail traders actually will believe that price move because of the news, not manipulation. And at the end of the day, you end up losing money while they make some profit. So most manipulation also happens during the forex fix. The closing currency fix refers to the benchmark rates for 21 major currencies. So this event takes place in London at 4 p.m. daily. So every day this event happens. It's like a balancing of accounts. For those of you who are business person, let's say you sell a provision shop, you sell, let's say, tomato noodles, you sell sachet water and other things. At the end of the day, you count money. You actually know, okay, how much sales have I made today, and how much have I spent today. So that's exactly what happens during this 60 seconds gap in the market every day by 4 p.m. at London. So they kind of do a kind of balancing. So the hedge funds use this opportunity, this 4 p.m. currency fixed period, to do their own manipulation. So let's say, for example, they have a client that wants to exchange cash and pay maybe their salary, or pay staff salary, or buy goods. They will now inform other hedge fund traders, this is what is going to happen soon. We have this so number of volumes coming in. So within that 4 p.m. period, you see price will start um, collapsing. Let's say sometimes you notice it in the market. Let's say, for example, in Euro JPY, when it's about close to that period, you see price tends to slow and drags. So this is the period they used to do all these manipulation in the market, and it affects our trades too. The retail traders trade. Sometimes if price is close to your stop loss, you'll be easily stopped out from the markets. Then, here's an example of currency manipulation. So this happened on August 5th, 2019, when the Bank of China sets yuan difference rate below 7% per dollar. This was for the first time in over a decade. This was as a response to the new tariffs of 10% on 300 billion worth of Chinese imports imposed by the Trump administration. So, and this rate went into effect September 2019. So the global market sold off on the move, including the in the US too. Even Dow Jones lost about 2.7% in its worst day of 2019 till date. Since 2019 till date, the Dow Jones have not lost up to that. So as a result, the Trump administration labeled China a currency manipulator. So let's look at a few live charts, and see the effects of this happening on August. That is August 2019 on the chart. So we first of all look at USD Chinese yuan charts. USD Chinese yuan charts. That was you go to the weekly so that we can see the charts clearly. Back here, that was a 5th of August 2019. So yeah, this is it, August 2019. So you can see on this chart, this was around August 2019. See, price of USD Chinese yuan was already high on the high side rallying. So immediately that news about um, the drop of currency, you see price drop, and since then price have not been moving to the upside. Rather, it has been moving correctively. See, price have been moving correctively within this kind of forming and ending diagonal. And it's already broken below here. Has broken below here. All right. So that is example one. Then the next example of manipulation that happened in the market is NZD JPY. Looking down here, what we have, the spike you see here, this is manipulation in the market. Because if you look at that spike now, that is over, say, over 300 pips. That is over 300 pips. This other one, they start from here. This also over 700 pips. Okay, over 600 pips. So these are manipulations in the market, and because the slash on the yuan interest rate also affected Japanese yuan pace. Look at the manipulation there. You see the spikes. I'm just showing you all this so you can see it's happening on the live chart too. This pound yen, you can also see it down here. These are all manipulations in the market. You notice once price, after the manipulation, price tends to push higher, and since then price has not tested the bottom again. That is how it's been represented on almost all the yen pace like this. This was the original support level here, the demand zone. But you see, the spike happened up to here. That is over how many pips? Let's look at how many pips is that. See, over 200 pips. So it was manipulated. So big boys, the big players had their positions, their buy orders down here. So they picked this manipulation now, picked up their buy orders and started moving to the downside and to the upside rather, and they are all in profit. Whereas you might have been stopped out because your stop loss will be very tight there. Your stop loss will be very tight there. All right, so we go back to the slide. I wanted to share all those charts with you. All right, so if you are still here and you are following me, type in on the chat segment that you are following. I want to make sure we are still here and you guys are following. Type in you are following if you are here and you are still following. Okay, King is following, Isaiah is following, Leslie is following, Covenant is following, Charles is following, Obina, Yemi, Peter. Okay. So I don't know, Maita concept. You are following. All right. So everyone is following. That is good to know. So we go back and jumping into the real, the three simple hacks on how we can overcome these manipulations. So the three simple hacks to overcome market manipulation is, the first thing, you need to be patient with your trading. You don't need to rush and enter a trade. You need to be very patient. Let the trade come to you. When the trade comes to you, then you can pull the trigger. Don't be very fast to buy at support zones or buying at resistance zones. That is the very first thing, because I see a lot of traders do this. Sometimes price will just jump in into the support zone and they don't allow price to settle in at the support zone to, so that they can watch and follow up market and price action. They'll just jump in and start buying because price is at support. No, it doesn't work that way. You need to be a bit patient and see and look at further price actions. Then if possible, you look at for chart patterns formation at these zones. That will really guide you and give you a clue what is going to happen next in the market before you jump in. So patience is really needed when, if you really want to overcome this market manipulation. Then two, you need to master corrective structures. Now I don't know, a lot of you here may be newbies in trading. you may not understand this corrective the corrective structures, especially the ABC waves, the expanding and the contracting triangles. These are the ones that are very very common on the charts. Anytime you look at the chart and you see corrective, a big corrective moves on the daily time frame or on the 4 hour time frame, we are we are most likely to see an ABC wave or an expanding or contracting triangle. So train your eyes. This is not something that I can just put it inside your head, but you need to train your eyes to spot these corrective structures easily. I'm going to show you examples of corrective structures, how they look like. Then the last thing here, the last thing to overcome market manipulation is let your stop loss be your entry. Be your entry. Now, the markets need psychology. Trading is not just about your indicators. It's not just about candlestick formation. Not about some chart patterns, head and shoulders. It needs psychology too. Now, to escape manipulations, you need to think differently from other retail traders. So many retail traders, when price gets into support, they want to buy a support, and where will their stop loss be? Few pips away from that support zones. So instead of you placing your own entry at that support zone, let your entry be at the price where other traders are placing their stop loss. So with that, when they are when the big boys, when the big players are hunting for stop loss, you won't be hunted. You will not be hunted. Rather, it's going to fill in your position and you'll be safe. And price will now reverse after taking all the let's say if it's a support, after taking all the stop losses and all the sell stop orders, price is going to reverse and move in your favor. Then you won't have anything to lose. For those of you who are always taking my signals, you will notice that my entries are always a bit far away from any key zones. I don't place my entry on the key zone. I take it a little bit higher away from the key zone. That's why I really love the harmonic pattern called the bat and crab, because the D point is always extended. So let your entry be at your stop loss. Where you are supposed to place your a stop loss, let your entry be there. So with this, you stay safe. You won't be hunted easily. So this is a live chart. I had to pull this up. This is a chart, and it's a representation of what has been happening. So looking at this chart now, you can see this is a resistance zone. There is a supply zone there, and looking at it from this other end, looking at it from this end, price was trending higher into the resistance, or you can call it the supply zone or terminology. I just love calling them key turning points. So that is the resistance there. You see price rejecting here. So this is where the big boys have started to fill in their trades. Now, as a retail trader, you will now see price respecting here and price also respect here. And what will you do? As a retail trader, what the textbook says and what so many trading courses will tell you is that buy and sell at resistance, then buy support. So you see price respecting here and here, and this is good for you. You said, okay, fine, I'm going to take a sell position. And where will your sell position be? Exactly on this zone. This is what I'm saying. It is wrong. Don't do this, because you'll be easily haunted. So you place your entry here, and where will your stop loss be? A little bit away from this zone, which is here. So you can now see what is happening here. Price is being pushed up. Now everybody that placed stop loss around here will be haunted. So you'll be out of the trades, and those also that are placing buy stop orders here will be trapped at the end of the day. And this is what happened after that. Price did what? Went all the way back down, then even closed below the demand zone here. So I believe this chart now I've explained the reason and why I say you should not place your you should place your entry at your stop loss price. Instead of placing your entry here, place it higher away from that zone. So in case there's a hunt, you'll be safe and your trade will not be positioned. Apart from that, if you should place your entry at where you're supposed to have a stop loss, you'll be safe. You'll be safe, and also your risk to reward will increase. So let's say, for example, between here and down here, your risk to reward would have been, let's say, 1:3. But if you take it higher here, your risk to reward will increase to, let's say, 1:3.5 or 1:3.7. So with this, you stay safe. This is a major way to overcome manipulation, because this manipulation is very, very hard to detect. You don't know when it's going to happen. Nobody can tell when manipulation is going to happen in the market. So you need to be very, very fast. When you see a zone, price respecting a zone, you need to think of, okay, what are other retail traders doing? So when you know what other retail traders are doing, you do the opposite of what they are doing. So if other retail traders are they are buying from this zone here, yeah, you don't buy at that zone. Take your entry a little bit away from that zone, then you stay safe. I don't know if I'm making sense to you guys. If I'm making sense, comments are making sense. Already I've seen what says I don't understand this one. But if I'm making sense to you, just comment I'm making sense. Making sense. Leslie making sense. Kim making sense. Okay, making sense. I need to see more making sense. Miracle, Covenant making sense. All right. That is good. That is good. So you guys are following me. All right. So that is the major stuff there. Oh, the guy that said you are not making sense. Okay, didn't understand. I hope you now understand. I can't find you again. Okay, I can now see you now. You are following. All right. Who is saying not? Arinze says not too clear. All right, I'll explain that again. The main thing is, one, you need to be patient. Two, you need to master corrective structures. I'm going to do an example of a corrective structure so that you see how it looks. Then three, the main thing is let your stop loss be your entry. This is the key to escape manipulation. This is the key. Apart from being patient and understanding corrective structure, the key is letting your stop loss be your entry. So for example, seen on this chart here, this is a zone, this is a resistance zone, and what do you do at resistance zone? You sell from resistance. So all I'm saying is that don't place your sell position, your entry price on this resistance there. Take it away from that resistance, take it higher, because the big players want to sell at higher prices and buy at lower prices. So if they want to sell at higher prices, they know that you guys are seeing this thing. So for them to sell, they need to have buyers in the market. So they tend to push price higher as in above that resistance. So when price goes above this resistance, so many retail traders will now say, oh, price have gone above the resistance. They will start filling in their buy orders. There are some that will even place buy stops up there. So their buy stops will be triggered. Then at the end of the day, they close their short positions, the sell positions, and what happens? Price now collapse and crash down. So even those guys that had buy stop orders that are triggered will be trapped and they'll be losing. I believe you are now following me. So make sure your entry is at the where you are supposed to have your stop loss. So I believe you guys are following me. All right. What if the market didn't get to your entry point, boss? Yeah, fine. If the market doesn't get into your entry points, you don't need to be in a hurry. So you miss pricing, activates your entry. What you need to do, wait for price to get back into the zone. At the retest, like this one here, there was a retest here, a retest of that zone. That should be your entry. So price closes below the zone again, retest that entry, then you can now sell from here and join the trade to the downside. Okay, I hope I've explained that question, Isaiah. Please keep your questions to when we are done. I will now attend to your questions. Okay, so just keep your question to the end. Isaiah, I've answered your question. Okay, got it. I just saw that you got it. And so these are the key takeaways. Manipulation is difficult to catch, but it's also difficult for the manipulator as the size of the market becomes larger. So let's say they want to manipulate price at a resistance zone. If there are more buyers at that resistance zone, it will be very, very hard for them to manipulate and push price to the downside. So Also know that manipulation can be referred to as price, market, or stock manipulation. There are two common types of stock manipulation. One is the pump and dump. The pump and dump is they use the media to do this. So they will talk about good stuff about a particular stock or a currency, and the price will rally. So when price rallies, so many retail traders and so many other speculators, will now start buying. So when they buy to a certain target which they want, they will now kill the whole hype, the whole vibe, and price crashes down. The other one is a poop and scoop. This and scoop also, it happened with Bitcoin. Happened with Bitcoin. That was 2018. Let's look at Bitcoin chart. That happened with Bitcoin. I still remember. This is Bitcoin. So 218. So yeah, this is the weekly. You notice that this is what we call the poop and scoop. Now, if you remember, within 218 and 219, there were so many rumors circulating in the mainstream media. Even Bloomberg carried it, CNBC carried it, that Bitcoin is scam, Bitcoin is this, Bitcoin is that, and people start panicking and selling off their Bitcoin. And we had this move here. So immediately after that, few months after that, what happened? Bitcoin rallied, and during this period, if you go search, you realize that during this period, this is when people like JP Morgan, they started buying Bitcoin, and Bitcoin rallied up again. So this is a clear example of a poop and scoop manipulation, type of manipulation on Bitcoin there. The currency manipulation is done by the banks, like the central banks, like what we just said with the China that happened last year, August. So that is really done by the banks. So how to avoid market manipulation is to stay away from low volume currencies or securities. All those, if you are trading stocks, avoid smaller companies or penny stocks, because they are the ones that are more prone to market manipulations. Though they may sound so enticing, like right now everybody's jumping on Tron. They're saying Tron, 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 Tron. It might be a manipulation there. We know what Justin can do. He can do anything just to promote his projects. So you need to be very careful if you are buying Tron, because they may just give the whole vibe. The mainstream media promotes the coin, and when it gets to a certain target, it will stay stagnant or maybe even fall to the bottom. So these are the key takeaways. I hope you guys all have questions. I'm going to attend to your questions. Then before we jump into questions, if this is the first time of you joining any of my webinars, my name is Anebitasa. Sorry, I just did the introduction at the end. My name is Anebitasa, and if you want to learn more about Forex, you want to know the A to Z of Forex, you can enroll for a pro trading course. In this course, there are so many things to learn. Let me scroll down and share this with you at once. So if you really want to learn how to analyze the markets 100%, you need to enroll for this course, and there are huge testimonials here. I can just send this link to the chat session so you can tap on it, or maybe I'll place it on the group. So if you enroll for this program, for the Pro Traders course, you learn more about price action. You learn more about price action. You learn how to spot the trade of the big boys, how to identify market weakness and spot the next big move. Then you learn more about trading mindsets, and also how to set up your own winning trading plan. Then you also learn more about risk management, and also signals and indicators and EAs. You also learn how the best ways to use indicators, and you also get to learn about the indicators which I use personally. A lot of you guys know I don't use too much indicators on my charts. My analysis are pure price action. Few indicators there are just for double checking. So these are bonuses also included. So if you enroll if you enroll for the Pro Traders course, you get access, you get a free access to the Pro Traders course, the weekly trade forecast, you get my successful trading plan, and then I'll share some indicators with you, the indicators which I'm using. And you also get live webinar sessions like this one. So the price is just this is way discounted already. The total value for this is over 500k, but it's way discounted, just so that you won't say I don't have money to learn forex. So it's at 3,500. So if you want to join the Pro Traders course, you need to click the button below this video. You need to click the button video this video. There are more testimonials. I'll send the link out to you guys, but this just in passing. Let's go back to the slides and then attend to your questions. All right, so I'm back here, and I believe everybody's back here. Everybody's back. So let's attend to questions. Is there any question? As far as you have a trading related questions, you can ask now. I'm here to attend to you. Oh, nobody has a question. We call it a day. Any trading related question, or if you want us to analyze a particular currency pair, then we can do that. We're saying wait. Okay. Analyze EURUSD. Wow. Link to Pro course. All right. The link to the Pro course will be. I will drop it on the WhatsApp group. So I will do that. Please, what are the real candlestick formation or pattern that can make us identify market manipulation? Hold on, but reversals. I'll take the first person first. First come, first serve. Yemi said analyze EURUSD. So we jump on EURUSD. So guys, wait. So we answer. Let's go to EURUSD first. EURUSD. So this is EURUSD. Okay, let me clear all the analysis I have there. So we can start from bottom. So this is EURUSD. This is a clean chart. For those of you in the inner circle, the mentorship program, you might have seen my analysis on EURUSD. I have the overall market structure here, and you see prices tends to push up, and I'll plot it out here for everybody to see. This is not my trading chart though. This one I only use it for when I'm doing webinars. I believe you guys have seen my real trading charts before. It's always dark in color. The background and everything is dark. So so this is EURUSD. Price tends to be trading in this bigger channel on the higher time frame. So when you are doing analysis, make sure you are doing a multi-time frame analysis. You start from the top. So price is moving in this direction. So what do you think price will do again? Will push up. So right now we are looking for strength on the euro. So price will push up. So you do this. This is very, very valid. We want to see price break out of this other trend line and head to the top. That is a long-term projection. That's a long-term projection. I just want you to have that in mind. So we go to the time frame lower. So the weekly. This is the weekly, and we tend to see this looks like more like an ending diagonal here, which price broke out. But I'm going to delete this once I draw it. I just want to want you guys to see this. So price did this. I don't like plenty lines on my chart, so I'm going to delete this right now. So I deleted. I just want you to see that right now price is here, up here, and we see some rejections up there, and impulse to the downside is happening. So we want to see at least the original plan is for price to break out this trend line on the weekly and keep pushing higher. But for price to do that, you know, big boys, they won't like to sell, and they won't like to buy high. They want to buy low. So price needs to drop down a little bit and keep pushing. So to be on the safe side, it's better you sell this for a short term. We need to sell to at least the 61 or 78% retracement level. So this is my FIP. and that level is here. I can pull out an horizontal layer and plot there. So this zone here, it's a valid zone. So we want to see price. I'll change that to black so it's visible. Right, so that is a valid zone. We want to see price drop back to 1.1344. So that is it. But we have established that fact on the higher time frame. So we need to scale lower to the lower time frame and fine tune our entries. So for those who have been following me, I posted something like this weeks ago. That should be 2 or 3 weeks ago. I posted it on Facebook, even on the Telegram channel, something like this. I say price is carving an ending diagonal, and we were waiting for it to break lower, and price did just that, broke lower, and this is a corrective move. So we need to wait and see that correction to finish. On the daily, that is where I love pulling up my pivots. So my pivot is close to R1. So I think we watch out the R1 before we sell. So let's go back to 4R. We go down to 4R and see what is happening there. This is 4R. All right. We see price slowing down from here. See price slowing down from here. All right. So 2R. All right. This is what is happening. So as a smart trader, we want to see this breakdown. So when you see that breakdown, you can now start selling. See that breakdown. So what you need to do, I will sell. I'll look for selling opportunities on EURUSD. But don't jump in and sell at the moment. Don't sell. Wait for price to break below this trend line. Correct. Price may not retest this trend line after breaking down. So if you don't see the retest, don't panic. Rather, wait for price to drop low, correct, like give you something like this, let it range a bit. So during that range, you can now sell, then and wait for it to drop low. So when price does correct like this, you sell around here. Your stop loss should be around here or high here, and your stop loss, your TP way down. So Yemi is it seems you are the one that said I should analyze this pair. Yemi, if I were to be you, I will be selling EURUSD. Normally it's been a long time I don't trade EURUSD. Rather I trade pound USD. So okay, so that is for Yemi. That was Yemi that asked that. Okay, yeah, it was Yemi. So the next question, please. What are the real candlestick formation? So I don't trade all the candlestick formation, David. So there are very few candlestick. If you have gone through a beginner's course, the candlestick I shared there, those are exactly the candlesticks which I use as my entry triggers. The hammers, the pin bars, the engulfers, the railway, and also the tweezer tops and bottoms. Those are the only candles I use as my entry trigger. So you can also model that too if you're having issues with. You don't need to know all the candlestick names now. All those plenty names, they don't really matter. It's applying them that really is the main deal. Isaiah says analyze gold. So let's look at gold briefly. We can start from the monthly, but so you see from the monthly, gold have been trading all time. It's been going up. So you see it's going up. Yeah, precious gold. So this is gold. This is the long-term picture on gold. See price pushed up, drop, pushed up again, actually closed above these highs, but that is not enough. I still see it pushing up. Because price needs to close this above this high very well, like extend a little bit, then drop. This is what I want to see. So I still see gold pushing up, but for now we are just having a little bit of a correction on the lower time frame. That is why it's staggering. So this is the weekly. It's already dropping. So maybe let's go to the lower level, the lower time frame. So here is where we can be talking about corrective structures. This is it. This is it. I just spotted this now. Thank God I spotted it when you guys are still here. All right. So this is a corrective structure. Price may trade within this, then breakout. May keep doing this and head to the downside, then breakout. We may see that happening, or we may see a bigger move, an ABCD correction. Price may trade like in a range like this. I just have to point this out for you to see, because these are different. When you are trading, you need to think in probabilities. You need to have plan A, B, and C, if possible D and E. But most times I have plan A, B, and C. So this may be a bigger correction here before gold keep pushing up. So gold will do something like this: push up, drop down again, then continue push. So this A, B, and C. Sometimes I won't be surprised if price do this, drop, instead of stopping here, goes a little bit lower so that it can trap sellers, then push up again. All right. So plot this. You can plot this out. Isaiah, you can plot this out on your chart. Either this scenario, this range scenario, which may happen, or price moving in this corrective phase like this. This corrective phase like this. Oh, my drawing is bad. So, but let's go to the way this is the bigger correction I'm showing you here. So let's go to the lower time frame and see how we can buy or sell for short term, because we want to trade short term. So don't forget, this is a zone that is being broken here. I change this color to black so you can see clearly. So I change it to black. So you see price broke below this zone and is retesting and is close to this trend line. So we should be looking for selling opportunities there. A short term sell, something of this same move again. That should be over 300 pips or 500. So we want to see that same move happening again. Right now there's no clear rejection at the top, so you won't sell. I can't recommend a sell. So price is still moving slowly to the top. So just stop that. So just wait for price to still keep pushing slowly. Tag this, give you a rejection, then you sell from there to the downside. All right. So that is gold. But if you see a breakout, follow it to the top. But I actually, this week I'm neutral. You guys saw my watch list on gold for this week. I was actually neutral on gold, and I'm still neutral. But if I see a clear rejection on that trend line, then I'm going to sell. So Isaiah, I think I've done justice to what you said. Where did I stop? Whoever is saying I should analyze USD Swiss francs, if Euro USD is selling, just know that USD Swiss francs is going to be buying. That is correlation. I thought I've done a webinar on correlation. Okay, I did it for the guys in Pro Traders course. I've done something on correlation before. So if Euro USD is selling, just know USD Swiss francs will be buying. So just go and do your analysis on the chart and look for entry to buy. All right, David, the time frame for entries depends on your trading personality. So if you're a scalper, if you're a day trader, you should know your your entry time frame. Like me, I'm a swing trader, more like position trader. So my entry time frames are basically 1 hour and 2 hour time frame. That's my entry time frame. All right, Isaiah say too much, boss. Thank you, sir. I think we are good for the day. No more questions. Thank you guys for joining. I think that is all the question. There's no more question here. So thank you guys for joining. It's a pleasure. It's my pleasure. Then let me share this with you. Guys. You see this trade? You guys should not miss this buy. The next buy move will be hot. It will be very, very massive. What do you have to tell a trader who lacks self-confidence? Wow, self-confidence. Practice more. You need to practice more. Then reduce your position size. From there, you build confidence. So let's say normally when you are always scared of taking a trade. So this time around, always be bold by with taking your trades, and don't use a big lot size. Use small less one. If possible, so don't even use a standard account. Use a cent account to trade. So with this, you'll be build you build your confidence gradually, gradually. So that is what I can say for someone who does not have confidence in taking his or her position. So back to this USD Mexican peso is an exotic pair. This is the monthly analysis, but uh, believe me, this you see this trade here is going to skyrocket. We are going to see another 2000 and something pips here. Another two. You see this move happening? We are going to see another one happening. Heavy. Well, over to this is over 7,000. I know it will not reach 7,000, but at least it will reach 3,000, 2,000. That will be my target. At least this highs. I want to see it back to this highs here, back to this highs here. So, uh, so don't miss that. So during this US election, you may see it trending lower again within this range. So as far as price is still settling within this range and you are seeing some bullish impulse from that bottom, make sure you are buying this USD MXN. Already you see last week move. This is last week move. Last week move closed bullish. And right now, for me, I've not yet taken a position on this trade. I want to see at least a 61% retracement of last week move. When I get that and there is a confirmation, then I will buy. um I was doing an analysis with one of our mentorship guys. That is when we analyzed this trade, and I told him when price was around here, I told him to buy. I know he has made profit by now. I told him to buy, so I know he has made profit by now because I didn't really take that trade. I already had more trades running, so I didn't want to take that trade. So USD MXN, this trade, this currency pair have been following a market structure on the higher time frame and it's superb. So it's a good trade to keep an eye on. A good trade to if you have even if you have $100 account, though the spread may be very wide depending on your broker. But if you have $100 account, you can take it with 0.01 when price have settle at this bottom and leave it to run for the next coming weeks, okay, or for the next 1 or 2 months. You get massive profits. You triple your account if you should leave it there. You triple. I bet you triple your account. I know what I'm saying. You triple your account. So thank you guys for coming. It's nice. There's no question here. No complete analysis. All right. So good night, everybody. I'm going to send the link, the Pro Traders link to the group. You guys will get it there.